calls, your emails, your text messages. So we're going to solve your dollar dilemmas. Kat in Kansas. Kat, what's your dollar dilemma?
Well, thanks for taking my question today. My husband and I, we don't really trust anyone to manage our money, and we use an online trading company to invest. Could one of these companies pull off a Ponzi scheme?
Well, Kat, listen, we don't, we think listen, I can't even Madoff. That's all I got to say today, Kat. I don't blame you.
Right.
But trading online, Doug, it depends.
Yeah, Kat, it's obviously there's a lot of mistrust going on out there, and rightly so. But what you have to do is, whichever online broker you're looking at, the first thing you have to make sure is that it's covered by the SIPC. And you can go to SIPC.org and learn about the coverage, how it works. As long as you're under the realm of the coverage there, in that account, you should be fine if that online broker participates in the SIPC coverage. And some have excess coverage, but I would just argue maybe you should spread that out if you're over that investing limit.
Yeah.
Is that government-backed also?
Right, there's a certain amount of coverage for your securities if somebody were to make off with those securities, and there's a certain amount of exactly, and there's a certain amount of coverage for your cash that you might have in the brokerage account that sits in the money market, and it's all explained in there. And this is something that everybody should know about. That's some of the coverage that's coming in for people who have lost money with Madoff, actually.
All right, Kat, I recommend dipping your toes in with a little bit and then make sure that you do your research first. Thank you so much for calling in. Now, Joanne posted a message on our Facebook page. Here's what she had to say. My current employer stopped matching my 401k contributions. I heard if this happens, I would be better off investing in an IRA. Is this true? This is interesting. I mean, Jennifer, a lot of calculating going on here, but not necessarily.
Well, that is really, that's one of those rumors that we hear, and it really comes down to where the best investments are. If your 401k has just awesome investment choices with low cost, it can be very convenient to just put it right in from the 401k, from your paycheck to the 401k. But if your 401k is awful, if it's in expensive investments, then going to an IRA is going to be a good way to pick what you want. It also comes down to how much you want to put in. You can put much more in a 401k plan directly from your paycheck than you can in an IRA. So maybe in order to get the maximum in the 401k, and if you can do a little bit more, and you've got the good choices in the IRA.
Yeah, so it's not just about the tool. It's not just about the tools or the umbrellas. You got to know what's inside.
Yeah, I'm a big fan of any time you can control your money outside of your employer separately in your own IRA, do it. If you are only contributing a small amount anyway, you should probably do that in the IRA if you still get the tax deduction. But if you need to put a lot away, then you do have to do it inside the 401k.
If you qualify for a Roth, go there. Thanks, Joanne. 1 week here, once a week here at On the Money, is when we celebrate a money triumph and induct a new member into our Success Club. This member comes to us from personal finance community, Wesabe.com.
I was a divorced single mom with 2 children and just starting medical school. I racked up nearly $200,000 in medical school loans and over $30,000 in consumer debt. I could barely pay rent, and I was struggling to pay my credit card bills. I had to get on the right financial track for the sake of my children. I monitored where every dollar was spent with a strict budget plan. We never ate out or went on vacation, and we never replaced the TV that broke down in the living room. I finally secured a rewarding job as a physician. My salary increased $90,000, but I lived below my means and put the additional income towards paying down consumer debt and half of my medical school loans. And 15 years later, I'm finally on the right financial track.
Jennifer joins us on the money line right now. Jennifer, welcome to the Success Club. You've been fantastic. You made fantastic headway. Now, you've got some follow-up questions, though, for us, because you've cut that debt in half. You got some savings socked away, but you have questions because you're getting closer to retirement.
Absolutely. The majority of my retirement now is in mutual funds. About 70% is invested in stocks, and I've taken about a 30% hit with the market. And I'm wondering if I should change my allocation and if I should continue to put the maximum into my retirement fund.
That is a very good question to ask, guys. I mean, Jennifer, do you have your allocation is about 70%, right, in the market? And when are you looking to retire?
Let's aim for 65 at this point.
All right. What do you think?
Oh, wow. I love Wasabi. And Jennifer, that's an amazing, amazing job that you've done. And what you should think about, I mean, that asset allocation could very well be perfect for you. You might only want to work another 9 years, but by stretching out a couple more years of work in order to recover what's been lost in the stock market so far, that could really be where you're at. So I suggest stepping back, looking back at your plan, reviewing the asset allocation before just changing and reacting without actually having a plan. It might be that you want to work a couple of extra years and stay with the 70%.
And Doug, she's got a Roth and a 401k. I know you're a big fan of kind of not just putting all your money in the 401k.
Love the Roth because there's no greater tax-free place to have money down the road. Everybody defers everything and then realizes down the road they have to pay taxes on that. So it's nice to have a little chunk there. But, you know, this is a perfect example of somebody, you have three choices in life. Live at your means, above your means, and below your means. And when you live below your means, and we're a big proponent of it, trying to live on 80% of what you make from day one. If you do that and put that 20% away, there's pretty much an unlimited thing that you can accomplish, whether it's accumulating your goals, retiring, or what have you. So I think you're doing the right thing, but you do need to retest your asset allocation. There's plenty of online tools to get a look at what your risk tolerance is and whether a 70-30 stock to bond mix is appropriate.
Jennifer, you said you've only lost about 30%. That's actually good. I think we like a little bit where your money is. Congratulations again, Jennifer. You've been doing fantastic. We're going to be checking in on you. Keep us posted. Now, if you've got a success story for us, we want to hear about it through Facebook. Join our official fan page. Just head to otm.cnbc.com to sign up. Can't wait to hear from you.